G offered me two trades. G offered me two trades last week,
Yep.
which was Thursday, on
Mm-hmm.
Thursday and on Friday. However, I missed the Friday one, and the Friday one was actually, I feel like that one was the higher
Crown.
probability trade.
Yeah, it was the crown of last week.
I, yeah, I think Olaide was in that trade. She probably still is in the trade right now. I don't know
Don't mind
if she
that.
has
She's being sly. She's not giving boys food. Being sly.
Yo, no, but shout
Look
out to
at all
Olaide
you've
though.
caught.
Shout
Look
out to
at all you've
Olaide.
caught. But I'm hearing you. I'm hearing you.
Shout out to Olaide. Olaide gave me some insights. I don't know if you go through the group chats,
Yeah, I
like
saw.
on the
I
team
saw.
chat, you see that.
I
Yeah,
saw.
we
I
had
was,
a
I
little
was taking. I was taking notes too.
yeah, and it was very insightful for me to be very
Mm-hmm.
honest, bro,
Mm-hmm.
because I'm due for a payout in like 2 days on my account.
Oh yeah, that's very good. That's very good.
Yeah, and
Oh,
That's big
I'm
shit.
slightly up.
congratulations.
Thank you very much, bro. I'm slightly up on the account. I mean, you guys have been there from when I started
Mm.
the phase one and
Phase
all
two.
through to the payout. Yeah. So yeah, it's been a very it's been a lovely ride, bro.
Yeah, it's been a lovely
Yo,
ride.
shout out to you,
Very
man.
excited.
May may you influence you influence me so much. You have no idea, bro.
I appreciate
Sometimes it feels like I've already met you, but we've never even met.
We've never
Sef.
even, I don't even know
Like,
if
but
I know what your face looks like.
yeah, but you influence me so much, man. It's like,
Appreciate you, man.
bro, I can't even explain it.
I
Like,
appreciate you, man.
I can't even explain it, but I really appreciate you guys. I appreciate you for, creating
Mm-hmm.
this,
Mm-hmm.
a platform for people to just, some of the information, in fact, the majority of the information we get here, people out there, they're paying like, loads of money
That's
to
fact.
get, access. You know what I'm talking about.
Fact. That's fact.
But I don't even know the God that touched your heart and made you do this.
It's good. Honestly, it's good.
Yeah,
But I appreciate you, man.
yeah, and I really appreciate you, bro.
Mm-hmm.
So back to what we're saying, right? Like, so on the chat on GU, right?
Yep.
GU offered me two trades last week on Thursday and then on Friday. Yeah, the Thursday one was I utilized Asia's high. There was a fair
Mm-hmm.
value gap on the 30 minutes. There was a 30-minute fair value gap resting above Asia's high. Yeah, right there.
Mm-hmm.
Yeah,
This one here.
yeah,
Ah, that was big.
yeah, right
I
there.
saw that and I'm like, shit.
Yeah.
I'm thinking
So
of equal highs. Yeah.
so yeah. So those equal highs, and those equal highs, they were formed at during Asia's high.
Mm-hmm. Mm-hmm.
Yeah, during Asia's high of the same day of Thursday. So when price ran those highs, I was like, yo, this is a high probability. And I had already been watching it all day. Like I already anticipated the play.
Yep.
So when I see price just ran those highs, I took my first entry, and then by the time we got to the midpoint of that gap, I took
Yep.
my second entry, and then
Mm.
I rolled it all the way down to that high, to the low,
To
the
this low
initial
here.
low that price had created. Yeah, no, 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 the other one, the one higher than that one.
The one higher
Yeah,
than
right there.
this one here. Okay, okay,
No, yeah, this one. Yeah,
okay.
and then that was the point where I took partials off of this trade,
Okay.
and then I broke even. I anticipated for the trade to run into Friday, but
Yep.
then I'd broken even, and then when during Trump's speech, that whole
That
retracement,
shit. Yeah.
this whole that long week just like took me out of the trade, and I didn't even like I just took like I think I scaled out just like maybe 30% of my profit because
Oh shit.
I was yeah, just because I was anticipating for price to
Just
go
continue.
much more
Yeah.
lower like yeah, but when it happened, I was like, okay, fine. I knew already that Friday would definitely give a better option, a better entry,
Mm-hmm.
especially for the fact that we didn't actually break structure. That was just like a little, it was just
Yeah.
a week out.
It's just Trump.
Yeah,
It's
yeah,
just
it
Trump.
was
And
just
you
Trump.
get Iran saying that,
Yeah,
that anytime he says something and you see that spike, just do the other side. Because it's short-lived. It's short-lived. Yeah, I'm here, you, man.
yeah. So then Friday came, and then on Friday we created a gap, which is that gap over there
Yeah.
on the 30, yeah, 30 minutes, same 30 minutes. But this time around, that gap was formed at London session, London opening. But this time around, we utilized Asia's low instead.
Continuation from Thursday. So we're not going to see
Yes,
Asia's high being run out. Yeah.
being run out. Yeah.
Mm-hmm.
So we rather we utilize Asia's low and then look at the whole drop. It was so fucking like it was heartbreaking for me
Yeah.
because I waited for this play, I anticipated it, but then I missed it.
Yeah. Yeah, it happens.
I missed
It
it.
happens. And it
But
gets
then
heartbreaking. I'm hearing you.
I have a question.
Yep.
Like from the first trade I just told you about that I took, right?
Yep.
What what do you think that I could have done better? Like because me when it happened to me, like when I was like, should I have not broken even, or should I have just should I have just let the trade just play out? You understand? Because when we ran that low, my instinct, my basic instinct is telling me like, yo, you need to break even at this point because price has
Price
already
has taken out the old low. Yeah. Yeah. Yeah.
yeah
Very, very good question. And as I was saying, I was talking to, a brother here, and it's exactly the same thing. I think it was up 2% on one of his on his account at some point, at another point, 1% on his account, and both trades came back at him at break even. And it's like
yeah because
break.
it's the same thing that happened to me.
Mhm.
I was up like at least 2% on this trade,
It's
but then I ended up taking just a little shy of like half of a percent.
Yeah, yeah, it's the
You
exact
get
same thing. And one of the things that you did good that you first need to praise yourself on about is that you're able to take partials before you move to break even. That's my first rule. If I'm going to be partially on a trade, if I'm going to be saying, because when you break even, you are saying, I have no risk. And if you have heard that quote, no risk, no rally, right? You don't have a risk, you don't have money. So what makes
yeah
you get money is that you have risk. If risk is on the table, then you should make money. So if you should be breaking even, it should mean that you've taken money and you are saying, because when you break even, you are saying, now price can take me out. So when it takes you out, you shouldn't feel bad because you have said, now it can take me out. That's why if I'm bringing to break even, there must be a partial. Now, the second thing to say here is there's a point where you move stops away from the initial point where you put your stops to a better point, not just bringing to break even. Because I see it, if you're going to put stops anyway, it needs to be that it's in line with market structure. What do I mean? There's an idea to how to trade or to how to pyramid entries, right? If you're going to be a very, very good if you're going to be a very, very good trader and you're going to make a whole lot of money, it's not just following the 1 to 2, 1 to 3 every single time. That can make you money, but not a lot. I'm just being very factual. That's where you start. You start by, 1 to 2, 1 to 3. But the real trader maximizes the wins and reduces the losses. Maximizing the wins means that you have a good swing and you are able to do what we call, pyramid entries. Now, to pyramid an
yeah
entry, I have a 5% trade with a 1% stop. So the way it works is you were selling here based on breaking market structure, so you put your stop loss here. Now, price
yeah
breaks market structure again, closes below the low. What needs to happen is your stops moves to the new breaking market structure's high. And that would be
okay
stops here has to move here, not inside of profits, because what makes this trade continue is that this high stays. And that's the same thing
yeah
I'm trying to scream about, very recently. If there's a breaking market structure, right, it means that this high to this low is the free move, or it's the movement. This is where price can move into. Price can still stay inside of this range. As long as price is inside of this range, it is valid. That means where my stop loss
okay
needs to be is somewhere outside of that range, because bearish market structure is lower highs, lower lows. So if I see this as a breaking market structure, which it is, for this to continue, it means that this high must stay protected.
yeah
So if this high is protected, then I can expect. Now, if price takes out this high, I can give up and say, you know what? I don't think it's still bullish. This doesn't mean in fact that it's not, sorry, I don't think it's still bearish. And this doesn't mean in fact that it's not bearish. But this is what keeps you in check. If you think about all of the breaking market structures, breaking market structure, return back into the range. And it's exactly what I talked about earlier in the call, right? If you aim for buying or selling at the end of those ranges, you'd see a lot more progress. If you aim for looking for those breaking market structure and looking for those ends to be selling, same thing here. So price returns back all to the end here. Why? There's a whole lot of buying influence from a move like this. There's a whole lot of people already buying this with the hopes that it takes out old highs. So this is the best point for it to reverse. And I think I was talking to one of my one-on-ones when this was happening. Price expanded all the way here, and I'm like, this is, and it's like, oh, Trump is speaking now. I'm like, all right, facts. Trump is speaking now. And we made the conclusion that if this is going to be a real speech, because who knows when the real speech comes in, right? If this is going to be a real speech, then we want to see a close above this high. A candle closure above this high is what changes things. But if not, we're going to see a rollover, which is what we then had. So again, you've taken partials, and this would happen. The first thing, I'm sure you already know this. You're going to have disappointments as a trader where you go into the trade, you got slipped, you lost money, and that's just what happened. Like there's nothing you could, because it could take out this high with a shallow run and still go lower, and nothing is going to happen. Just like this guy. Just imagine somebody that took this trade and it ran lower and you moved to break even. It takes you out and moves in your direction still. So it happens. But the idea is, if I'm going to really aim for something long term, and I see this a lot, it happens to me too. I've not still built long term bias, as much as I love to. I tell you guys, it's my weakness as a trader, holding swings, right? And if you're going to hold swings, you need to have the capacity to hold stops. If you're going to hold the trade to go lower, then it cannot just be break even. It has to be, where would it be wrong on this trade? So where it becomes wrong on this particular trade is when it takes out this high. And the moment you can start to just settle that with yourself and be like, okay, even if I lose the trade, I'm not losing the original 1% or 0.5% I planned. I'm going to lose, maybe a 0.3. It's going to be scarier.
Yeah.
But it's like, if I'm going to make a lot of money, I need to have an appetite for risk. It's just the way the game just plays. Those are coming to you very soon. So this is just the whole idea. If I like the risk part of it here is knowing that, okay, and that's why you hear that the hedge funds are able to hold 500 to 1,000 pips in drawdown. What that means is, because they are playing the game big, they have to allow that they sit in drawdown for a couple of days. They sit in drawdown for a couple of weeks. They have to be able to allow for that. And damn, I compromise my stops a lot. Even up to now, sometimes I still do it. Because I feel like, oh yeah, I should be able to catch the pin, like that exact pin where it's going to fall. Now, I've been able to do that a couple of times. But the truth is, if you are able to just let it be that, okay, this is what really makes the trade bad. Because, some people will say, oh, this is the OB, and because I bought here, why can't I just put my stop loss above the midpoint? It shouldn't go beyond the midpoint, but it does that. In fact, nowadays, it does it a lot, where price will leave the OB and come into the wicks before it starts to go lower. So it's not like you did anything bad. You're still able to get something on the trade, which is good. But just thinking forward, it's like, if I'm going to let it ride at least for a while, then I need to think about where, things start to stop, or where things become bad. And that's where your stop loss is. Your stop loss is what tells you that directional bias has changed. If you start to think about it like that, you see that the way you put your stop loss will get different. Now, what will happen is your risk will have to reduce. So you have to make that judgment and say, you know what? Now I'm going to be making a little bit less money, but you're going to have more better trades or right trades to that effect, because now you are getting the good entries, and the entries are able to pan out. So first, you learn patience. Second, you're able to say, you know what, my trades are going to pan out, especially if what I've put in terms of stops is protecting that directional bias. So we're able to get that.
Yes. Thank you very much.
All right, bless. So, I was hearing you. I'm hearing you.
I mean, yeah, so you just said everything. I'm never gonna lie, bro. You're very smart, because this is one thing I've been. No, it's fact. Like, this is one thing that's been affecting my trading.
Mm,
recently with the Trump price action, especially
mm,
with gold. You see,
mm.
market is always going to the deepest premium,
Yeah,
like deepest premium, deepest
deepest one.
discounts.
Yeah,
You feel me? Market is hitting other block and is rejecting from the other block, and you already think it's going
it's
down, but it
going.
still goes
Yeah,
up.
and it still
It still
goes.
goes up again
And
to
it's not like it's
take
taking
you
out the
out.
stock fully.
And what's more painful is, oh, it takes you out, then now goes your direction, goes your direction, and you're like, what the fuck is going to happen? You get what I'm saying?
Shit.
So, like, I understand what he's saying, but
Mm-hmm.
the reality is, like you said, it has to be when your break even has to be at the point where you know for a fact that you've lost the trade. Like it
Yeah.
is now, if you're bearish, if
Yeah.
market, you need to identify another block that you know for a fact that if market closes above that other block,
Yeah,
it's
that's where
now
you
bullish.
come. Yeah.
So like it's not going to affect you. Like
Yeah.
it's not really going to affect you
Mm-hmm.
because you know like okay you're in the wrong now. Like
Mm-hmm.
market's not going your direction.
Mm-hmm.
So yeah,
It's
I agree with that.
crazy.
Really
Yeah,
agree.
it's crazy. Honestly, I think I don't know, Gwenga's not here, but Gwenga stumbled on what he calls his model right now, and it was on a streak for months. It was on a streak for months, and that was his trading.
Yeah,
His trading was breaking market structure, end of the range. In fact, this is what it's going to do. It's going to have his fib high here. I think I just showed it earlier, also high to low, and until it gets to 0.79 he doesn't take his trade. And when he gets there,
it
he
doesn't.
sells it and has a stop loss
Yeah,
and just leaves it. And if you just look at Thursday, Friday, Wednesday, you'll see that if you did those three things on those days, you have massive results. One, you have a good trade that puts you in the right place and you have a good stop loss. It's when I thought about this very deeply sometimes 2 years ago, it's like it's how every business operates. Like the guy that buys the cheapest is the guy that makes the most money. And if you think about it in trading terms, it's like that guy doesn't even have to sell as expensive as the other guys will have to. If you bought all the way down here, you can decide that, oh, you know what, my price is good enough for me to sell 2, 3 times my price. Where you are selling at 2, 3 times your price, that's where some other guys bought. So they have to wait longer. And that's why in trading, you see that when you buy at premium, even though you make some money, you're not able to close profits because you have to see more on that trade for you to make profits. Because you're bought at premium now and you need 1 to 2 at least. But 1 to 2 doesn't get done because you're already up there in premium and it's time for price to retrace, it's time for price to reverse, and you just lose money. The same thing as
and the
selling.
retracement is
Selling
always
at
bloody
premium.
with strong price action.
Yeah, what did you say?
I said that the retracement is always bloody with strong price action. It's not even funny.
Exactly. Exactly. It's crazy. It's crazy. And it's crazy because all of these moves, and I think understanding that I'm to be attacked here, right? And I'm a villain. I need to fight back. I'm to be attacked here. The moment I know that it sounds crazy, it's like, oh, what are you saying? Like, why are you saying I'm to be attacked? But it's just the truth. The prop firms don't want you to make money. The institutions surely want you to be counter liquidity. They want to make money off of you. So the moment you start to think like that, you start to think like, okay, what becomes uneasy? One of the things that makes me, stay in the trade more is when I'm selling, right? And right at that point, I'm still seeing a little bit of push higher. Right at that reference point, or I'm seeing something like this. I sold here, it comes back here, and it goes here. I'm very, very interested here. Before I would be very scared here that, why is he going higher? Why is he about to stop me out? And I would make mistakes like
Yeah.
cutting the trade short or, just reducing my risk or doing something stupid here. But when he does this now, I'm like, okay, this is where I want to see you fall. Like right where it's going all the way higher is where I want to see you fall. Because if you think about it, every time you took a trade, you had some type of clear conviction that price was going to do something. Like it was going to go in that direction, bullish or bearish. Like you had one clear conviction, and he ends up in a loss, and you're pained, and you're like, what? And ICT said something that just busted that with me. It's like that sell trade would look like a buy in the moment. I'm like, what? That's very true. The sell trade here would look like a buy in the moment. It would look like, oh, breaking market structure is coming. Let me join it before it even comes. It would look like a buy trade. The sell trade will look like a buy trade in the moment. The buy trade also will look like a sell in the moment. Like, Nah, this is breaking market structure. Price will just use this mitigation block and go lower. You sell here, boom, takes you out. You're like, why does it not work? But if you look at it carefully, you find certain things, right? Time of the day, 6:30, right? But breaking market structure and the same thing that you were trying to sell here is exactly what price used to buy here. Mitigation block still rallies higher. So it's a crazy psychology that you have to just, agree with and sit with and say, you know what? I'm going to set systems in place. You don't even need to bother yourself. It's like if I'm going to be trading other blocks, I think it's one of the simplest models to trade. Other blocks in line with order flow. It's one, to me, it's still one of the simplest models to trade. It's an execution, right? But also it can also be a model. It can. Where you're just looking for, okay, I have the directional bias from the higher time frame, and I'm looking for breaks in market structures to confirm. And when I see those breaks, I wait for the other end of the range. You have good ranges in terms of stop loss. And that's exactly what we talked about on the daily time. Look at the daily time frame. It's the same thing. It's like, I think I took a loss here. Instead of here, just based on the fact that, this is a fair value gap, and because it's a higher time frame move, you are like convinced that now they are going lower, now they are going lower. But look at this. This is high, this is low. So if you don't have your stop loss above this high, you lose money. It comes very close to it, but doesn't take it out. Because when it takes it out, something else is signaling. We're now seeing a breaking market structure. So, okay, until it takes it out, I'm game. Until it takes it out, I'm game. I know when you see examples like this, you're like, this is just crazy. How did you not get bullish here? How did you not just get bullish here? Like this is buy side liquidity resting here. How did you not get bullish here? And that's why I love it. When it does that, the low of that range, pretty. It runs higher to give me that fake move that, oh, it wants to take out buy side liquidity, then breaks market structure, then this is a mitigation block. It's very bearish. We're having a failure swing because there's liquidity in here. But think about it, right? If you had all of your money inside of here because you were selling, would you want price to take you out? No, you wouldn't. You wouldn't want to eat your own tail at all. So you stay with it. You allow this stay, right? So if price is going to be bearish, right, it wouldn't take our old highs because that's where liquidity is. When we're bullish, we aim for buy side liquidity. But if we're not bullish, we let buy side liquidity be. So bearish market structure protects the highs, eats the lows. So eats the low, returns back to the lows, use it. Yeah, eats the low, returns back to the low, use it. Eats the low towards the next line of engagement. Oh, okay, yeah, it breaks this low. I would love this low as continuation. And that's what I'm waiting for. I'm not even so interested in how bullish it goes here because this can be very tricky. Inside of that fair value gap can be very tricky. Like it gets inside of the fair value gap, it can be very tricky. But if it breaks this low, I think we're still game with sell side. I'm still game with sell side. So I think it's a very, very important thing to think about. And trust me, I understand. I understand the stop loss thing. Sometimes the stop loss things is what makes the compromise. And you just have to make your impulsive decision as a trader and say, you know what, whatever it does here. It's the reason why I don't trade fair value gaps. It's a very, very painful thing to trade sometimes. Some people can trade it. Some people can trade fair value gaps. Westside Trader is here, and the way he talks about fair value gaps takes me out. Like, because when I think about fair value gaps, it's like, shit. It can really just take, I'm looking for an example now, I'm not seeing, but this thing happens a lot. It can take the fair value gap and still respect the range. Like this, you buy the fair value gap, you're excited. It gives you, maybe your 1 to 2, you're calm, and you're like, there's still buy side liquidity on the tape, equal highs. I want to leave that trade. So, when you're trading fair value gaps, your stop loss stays below the candle that carries the fair value gap. That's where your stop loss stays. Then this happens. Now, when this happens, you might not be really, really pissed because it's like, we're now bearish. Let me sell this fair value gap as inflation fair value gap, and they take you again. And you're like realizing that all along, this low to this high is the range. Because this is the range. And I know when you're thinking about daily ranges, you're not thinking about the candle. You're not thinking about just the consecutive candles here. You're thinking about the low carrying the consecutive candles. Those swing lows are the important things. So this is where your stop has to be. It's like your order block. You're not just thinking about the bodies of the order block. You're thinking about the low actually covering the OB. So this is the range still. And trust me, look how many times this dips into discounts before it goes. You would have been tired. And maybe at least from here, if you buy down here, maybe you bought here, and here. So it's kind of like, if you're going to be buying the discount here, you need to be like, if this is your, because where I view the charts is, this is daily time frame, but it is easily your 5 minutes time frame. Just forget the time frame. You see the same exact thing on 5 minutes. You see the same exact thing on 15 minutes. So it's like, if you're going to buy this, even if it's an idea in your mind, you need to know that you still have opportunities to be bullish until this low is taken. So it's a very good thing to think about. Somebody wants to tell us something. Let me see in the chat box. I'm seeing something, or ask a question. Today is the last time I will be allowing me go this deep into explanations. If you Ace plug, please. Ace plug, please. No, I enjoy this stuff. I was trying to make a video this morning, and that's what I was talking about. Like, I enjoy talking about this stuff because, guys, I sat down so many times. I cried about shit like this. I cried about, losing trades that were profitable trades. I cried about them. Like, it was just so painful that, why? Like, well, some of you might not have gotten there, but if you've gotten to the space where you look at your trades and you cry, like you look at how you perform, and you don't cry on those days because you were let me say you were impulsive. Sometimes when I'm being impulsive, I just laugh because it's like you are stupid. You don't know what you're doing. And that's me when I get to 2% of a funded account, 2% and below. Trust me, you see my stupidity just rise to the highest because I'm like, nah, man, I'm not going to, because my brain just automatically tells me you have to make 80% to be back on break even. And that's why Daniel here, big ups. Like big ups to you, because you took an account from 9 to 10K. Like, you might think it's just 8%. No, you did not just do 8%. You just did 80%. And if you've done that, you're a big champ. And maybe you need to celebrate wins like that to tell yourself that, you know what, shit, I can actually come out of this thing if I pay attention. And if you ask yourself every time you're able to drive yourself away from there, it was not by taking a big trade. It wasn't a one trade, then I just jump out. No. It's a systematic, I'm going to stay here until I'm out. I'm going to stay here until I'm out. That's a different type of patience. Every trader must have patience, but we all have different levels, and your levels actually determine. And that's why, even up till now, the kind of conditioning I put myself in is, how can I be more patient? How can I be more patient? How can I be under tension and still remain calm? That's what running does to you. That's what going to the gym does to you. That's what reading a book does to you. Is like, what are these people saying? How does this affect my life? Well, I need to complete 20 pages today. I need to complete 30 pages today. That's what I've planned to do. So me doing those things every single day is like, okay, I think I'm the type of person that can sit under pressure and still do the things. I have pressure every day, right? I'm like every one of you. I have bills every single day that I need to sort. But the ability to say those bills are not now going to force me into now over leveraging my account is what keeps you as a trader, is what keeps you as a business owner. If you go and look at the lives of the guys doing, a whole lot, the moment you start looking at guys that are doing a whole lot, you hear things like, I'm owing the bank 250 million. I'm owing the bank 500 million. Do you think that's not pressure enough? Because what if what I collected the money from the bank for, what if it fails? I have to figure out a way. But under that, the profits that they make from their businesses is not what is going to pay for the debt. That is still going to keep lifestyle and whatever thing that they have going. That has to remain. That would not mean that, now, because I'm only about 250 million, I have to now go and sell my business that is bringing cash flow in. No. It doesn't work like that. Because the way I think about it is we all are going to be at the stage where you're going to have $100,000 in drawdown and you're going to say, you know what, it hasn't hit my stops. I want you to think about that very, very deeply. You might not understand what I'm saying, but I just want you to just have a moment and think about it, that you're going to have $100,000 someday in drawdown. You're going to see it minus $100,000 and you're going to say, nah, it's still chill. It hasn't hit my stop loss. You know, at that point, it's not about 1%, 2%. It's like if you have not broken out of that numbers mindset where the numbers are still holding you down, you close it. And that trade could be your $1 million trade. Could be, because how do you think you're going to make $5 million if you're not going to have 100K stops? If you're not going to have 200K stops, how do you make $5 million? The goal that you want to have, buying the Ferrari, buying the this, buying the houses, how do you think you're going to get there? With $100 and you're going to move that to 1 million, it's a lie. It doesn't work. If you're going to do that, you would have made millions of dollars to be able to replicate that. To take $100. In fact, I don't even know how you're going to do it. It's a rare condition. You have to build and build and build and build. And what you're building is the ability to stay calm under tension. The ability to lose 100K a week and be like, okay, that was just still 10%. We go in next week and we do the business the way it should be done. Not, any other thing, but the way exactly it should be done. And then you're doing what was right. Right, compromise is what kills us as traders. I'm telling you from experience, like compromise. I know that this is the way it works, but let me do it this other way. Like, let me just, let me try and hash it a little bit. Then you give yourself a story. ICT said, one theory said, that, just to make sure that that particular trade that you're getting in, just you get into the trade. And that's why forcibly, I try to make myself, like today, I'm making myself know that let heaven come on earth. I'm not taking a trade today. Let heaven come on earth. Like, I don't want to know what happens today. Because if you can't give yourself the control to say, I'm not taking, there's no how you'll be able to say, I'm not taking the trade any other day. Because there are days where things don't play out. And that things play out when you don't trade doesn't mean that you've lost anything. Because whether you engage the market or not, the market is going to play. You're going to, the market is just going to move. Like, engage or not, go back 30 years, you see your order blocks, your fair value gaps, whatever, you see them playing out the same way we're talking about today. They are playing out there. Were you there? No, you weren't. But did they play out? Boom. Just go back 3 months. If we have used 3 months in the year, just go back week after week. You'd see that what you call your model played out at least 2-3 times. Right? But that didn't mean, or that you were there, that didn't mean anything changed. So if you cannot tell yourself and say, you know what, today I'm not doing this, because that's all trading is. Trading is doing the things that you said you would do. Shit, very hard, man. Very hard. Very hard. Doing the shit that you say you do, because it's you that is saying you do it. So if you don't do it, who is going to hold you? It's the one reason I know. It's the one reason I know that everyone I teach cannot be profitable, because some people will just decide not to do what they know to do. Because I know how hard that shit is to. I do. If you were paid to do a job, you have to do the job because probably they don't pay you. So there's a reason why you need to do it. But when it's for yourself, you know that, okay, man, it's just me now. If I don't do it, and just think about when you blow accounts, you just make one decision that particular moment and say, you know what? I don't care. I'm risking everything on this trade now. I'm risking everything on this trade right now. You just make the decision. Nobody tells you anything. You decide. The day you are going to blow your account, the day you are going to over leverage, you see that you are the one that makes the decision. And you see that when you are making the decision, you know that this is not what I should do. And that's what makes you cry. That's what makes you, that's what makes you just, go crazy and say, you know what, this is shit. Because it's not like, oh, something bad happened or the markets did something to you. You knew that, you know what, I shouldn't have funded that account again. After I was blown out, I should have just stayed. But you funded it. At least if you're going to fund, the next day is there. Right? There's such a thing as I took a trade, 1 minute later, I don't think it's a trade. I close it. I sleep until the next day. Think about the life that you want to have as a trader. It's not a life of stress, but we've made it that by locking ourselves on the 1 minute time frame, 5 minutes time frame every single minute, every day of your life. You're not living like I have lived like that. And I'm breaking out of that. Yes, I have to prep every single time. I have to do calls every single time. So my eyes have to be roving about the information. But that doesn't mean I have to now be there now. No. I have content to shoot, have businesses to help. And that's what I believe. I believe that you should have something that just fuels your passion. And if you don't, watch Netflix, please. Please, have fun. You would see that when this thing becomes smooth, it wouldn't be you doing any action while the trade is going on. You would have to actually leave it. And that's why I say do the back test of going into price action and finding your setup and saying, oh, this is my setup. When did it get to the setup? Thursday, 19th March. When did it deliver to TP? 30th March. So it took at least 11 days for my setup to deliver. If you go back on the 15 minutes time frame, you start to see sometimes it will take 4 hours for your setup to deliver, meaning that for that 4 hours, all you needed to do was nothing. You just needed to take the trade and say, you know what, until it gets to TP or whatever I need to take my partials, I'm doing nothing. And that can take 2 hours. That can, even on 5 minutes or 15 minutes, that can take the whole day. Sometimes that can take 3 days. If you're going to be in this move properly, you probably have to be in the move by Wednesday, Thursday, or Tuesday. And you have to say, you know what, since I'm buying a premium, I could allow it. All right? So guys, mindset is the biggest part of it. The thinking about what I want to do. And I say it a lot of times, when you're going to become profitable, it's not going to be you doing anything. You are going to sit down in the mirror one day and say, I am not going to do this stupid shit again. Like, I'm not going to do, like, you're just going to get, it's going to be a decision. Because trust me, every one of you on this call, you know exactly what to do to make money. You know, because it's not so hard. The problem is you have not just decided that you're the guy to make money now. You have not just decided. It's kind of like how I look at my life and I look at the goals I have. I'm like, bro, you have not just decided that you are the guy to make this money yet. Because if not, there are certain things you should be doing and you have to do. And yes, the stages, it's time, it's everything. You don't need to rush yourself. You don't need to kill yourself. But if you're really, really wanting it, then make the decision. Make the decision. Who got some insights? Who got some insights? We are wrapping up now. Like, we have like 1 minute. But let me see if you got some insights. Got something that's going to put you pumped this week. Because that's all this call is about. Wednesday, we're going to have another live call. And I'm going to be demystifying, exactly the exact 3 systems that you need to get profitable. It's not, I don't think it's anything crazy. Again, like I said, some of the things I said on this call is what I'm still going to say to you because there's nothing more there. But we're going to have that call and you need to join that call because there's going to be a 400 accounts given. It's going to be a 10K or 2 5Ks just to appreciate you guys. Honestly, just to appreciate you guys. Nothing more. And, yeah, we're going to do that on Wednesday. On Wednesday night, I have a rehearsal that Wednesday, but before that rehearsal, 1 hour, 1 hour, 30 minutes, we're going to meet and we're going to walk through. That day is also going to be the final day for joining the inner circle. So joining the inner circle with the early bird access, actually. So yeah. All right, guys, have a great week. Have a great week. Have a great week. Have a great week. And make me proud, please. Make me proud. We're going to meet all week this week also. So let's see how that goes. Bless up, family.